morning, good afternoon, good evening from wherever you're watching me from. Welcome back to channel, everybody. Today, we're looking at how to trade demand and supply zone. Demand and supply zone is a very common trading strategy traded by all traders. Okay, either you are new or you're trading for some time. You might have heard of support demand and supply zone every time. Demand and supply, demand and supply, demand and supply. And what is this demand and supply about? Actually, demand and supply simply means aggressive buying and aggressive selling. Okay, so if you talk about supply means what? Bringing something, right? Bringing. So aggressive selling, that's supply. Aggressive selling. So on the chart we can see that on the chart we can see supply means aggressive selling, and then can you see aggressive selling is a part of the chart where the market sold off aggressively. So aggressive selling, and demand means aggressive buying. Okay, part of the chart where the market bought aggressively, the market went up aggressive. That's simple. Supply and demand and supply means aggressive selling and aggressive buying. So on the chart you can see that there are moments in time where the market actually had a very big move. Very big move. Can you see? Very big move. These are demand and supply areas. Okay, very big moves. Demand and supply area. The market had big move. Can you see the big move? See, big move. Guys, can you see? Looking at this side, you can see the market had a very big selling pressure. Can you see? This side, see, the market bought all the way from here. Big move. So these are demand and supply areas. Okay, demand and supply area. Very simple. So demand and supply means what? Aggressive selling and aggressive buying. So with these concepts, how do you actually trade demand and supply? Most of the time, what people teach is that when you find a demand zone after the market has crashed or the market has had a very big move, or supply zone, what you have to do, you draw your line and you wait for the market to come to that area, right? And then when market retests at that area, you also have your entry and you sell off. But this does not work almost every time. Okay, if you trade like this, you are going to have a lot of losing trades, guys. If you trade using that strategy, you're going to have a lot of losing trades, because most of the time market does not happen that way. Let's see. So per that particular rules, what are they saying? They are saying that when the market retests back to the demand zone or supply zone, we enter our sell, right? Here, can you see what happened here, guys? Can you see what happened here? Here that we had a sell, the market did not even reach there. The market sold off again, so we couldn't have bought here. We cannot buy here. We all know that we cannot buy here. Okay, we all know we cannot buy here. But what about here? As me, you bought here. What would that have into your chart, guys? You would have had a lot of losing trades, right? You have a lot of losing trades because demand and supply zone does not work on the chart as you see, as easy as you see. Okay, it doesn't work on the chart as easy as you see. So they said when you find a demand or supply zone, you find demand zone, draw your line, and then when market retraces back to the demand zone, you buy or you sell. Guys, if you do that, you're going to have a losing trade. You're going to blow your account. Okay, going to blow your account. Let's example here. Can you see there was another aggressive selling here? There was another aggressive selling here. And when market came, what happened, guys? Can you see what happened here? Are you watching here, guys? What happened? The market will take you out, right, and continue. Or let's see, here is even a new demand zone. You decide to buy. Sometimes it will work, sometimes it will not work. So see what happened. You draw a demand zone here, and market did not even reach there. The one that the market will reach there, the market will bypass you and take you out of the market. So does demand and supply zone actually work? That's the question. Does it work? Are you supposed to trade demand and supply zone? Yes. Can anybody tell me? Does it work? Over years of experience, this is what I've realized, and I want to share with you here today. Supply and demand zone does not actually work as you see it on YouTube. Okay, you can only trade supply and demand zone if you know that the currency, both the currency pair you are trading, both of them are strong. Okay, in trend following, we know that. We buy when we the market retraces back and we join a trend, right? So as it means this is our trend line. That's trend following. Trend following is completely different from trading supply and demand zones. Okay, so for instance, in trend following, when the market retests, you enter your sell or your buy here, right? This is a sell, so you enter your sell here and you enter your sell here. That is trading trend following, which means that one currency must be strong and one currency must be weak before the market can trend down or trend upwards. One currency must be strong and one currency must be weak. right? Before both of them merge together, the strongest take over the weakest currency, and then the market will trend. Either the market is going upside or downside. So in trend following, we merge the strongest currency with the weakest currency. But in supply and demand zone, we don't do that, okay? We don't just trade any chart. When the market is trending, we do not trade supply and demand zone. Guys, it's very simple. When we are in the hot weather, we don't sell what? We don't sell coffee, right? When we are in the hot weather, we sell what? Ice cream and cold desserts. Simple. When we're in the cold weather, what do we sell? We sell, if you're in the cold weather, we sell coffee, right? We sell coffee. So the same happens in trading. You cannot just trade anything at any moment in time. You must know which season you are, which weather are you currently in, which market weather are you currently in. So as you can see, market can go through uptrend, downtrend, and sideways trend, right? We all know it already. Good. So you must only trade support and resistance when the market is always going through what? Sideways mode. So demand and supply only work when the market is trading sideways. And how can the market trade sideways? The market can trade sideways when both the currency pairs are equal, they are equally strong or they're equally weak. Okay, so trend following, let's recap. Trend following, what do? You trade the strongest with the weakest currency so that the market will trend. So you follow the trend. But trading demand and supply, you must only trade two strong currencies or two weak currencies. It's like fighting each other. If two people are fighting and they are all strong, they will be turning upside down, right? They'll be turning upside down, upside down. The same happens to the market. If both the currencies are strong or they are all weak, then they'll be fighting each other. That's when you can only trade demand and supply zone, guys. Are you listening to me? That's when you can only trade demand and supply zone. So before you even think of trading demand and supply zone, before you even think of even starting your trading analysis, search your currency trade meter. Search which currency is strong and which currency is weak. Okay, merge two strongest currencies and search for their charts. Search for trade patterns on their chart, or merge two weakest currency. If you don't know anything about currency strength, go to my previous videos. I have a video dedicated for currency strength and master it before you come in contact with this video. Okay, before you trade support and resistance or demand and supply, make sure that what you are watching your currency strength. You are merging two strongest currencies or two weakest currency. For instance, on this particular chart, as you can see, the pound is strong and the euro is strong. So right now, if we want to trade support and resistance, we must rather go and search for what? Euro pound. Simple. We can see that the AUD is weak and then the yen is weak. So if you want to trade demand and supply zone or support and resistance, we must search for what? AUD JPY. Simple. So when we find this market, then we met the strongest with the strongest currency. They'll be fighting, they'll be turning upside down, okay? They'll be turning upside down. This person will beat this person a little. This currency trend will also beat another a little. Then they'll be turning upside. That's only when support and resistance work or demand and supply zone work, okay? That's when you can only get aggressive selling and aggressive buying. Do not do this when the market is trending. Don't merge the strongest with the weakest. If you merge the strongest with the weakest, it means you are following the trend. Because when the weakest is paired with the strongest, the market is going to trend. This is simple logic, right, guys? So to trade currency strength, you must first go to one higher time frame. One higher time frame, higher than the time frame you are trading. So for instance, right now, I'm trading the M15 time frame. Can you see? This is M15 time frame. M15 time frame. And my higher time frame will be what? Either M30 or H1. But M30 is just like M15, so I'll prefer H1, okay? So if I'm trading M15, I must go to H1. So on the H1, what should I look for? I'm looking for 3-point support areas, okay? 3-point support areas for them to become my demand and supply zones. So for instance, on this chart, where can we see 3-point support areas? Good, we can see something here. So for instance, assuming this market has not played, let's assume that this market has not played here, okay? Let's assume this market has not played. So let me hide it here. Okay, it's going. So okay, just focus on what I'm trying to teach you. Don't focus on this side of the market. Focus on what I'm trying to teach you. You want 3-point support areas. So 1, 2, and 3. Something like a V shape. Okay, it can be upside or can be downside. So we have one zone. We have our second zone. This is a second zone, right? Because this one will touch before this one come and touch. So we have our second zone, and then we wait for the market to either touch this one again or touch this one again to confirm our 3 zones. So now it came to touch the top. We have 3 zones. After your 3 zones are touched and confirmed, this is when you have to get ready to trade your support and resistance zone on the higher time frame. Okay, so the higher time frame, this market has not played, so we didn't know whether the market was going to continue here or not. So this is our second touch. So we see 1, 2, 3. So we were either waiting for the market to retrace to any of these zones on the line. Okay, any of these zones on the line. So let me extend them. So let me use a very big okay, let me just clean this one. So assuming this market has not played, I don't want you to be focusing here. Okay, this is MT5. I cannot replay the chart, so it's very difficult to replay. That's why I'm showing the already played the chart. But focus on what I'm trying to teach you. Focus on the concept I'm trying to teach you. Assume this trend line was extended. Okay, we assume this market has not come. Assume this market has not come. What I have to do is that we just extend this trend line after we find our three touches: 1, 2, and 3. After we find our three touches, we are waiting for the market to retrace back in this particular box. Okay, in this zone. So we go to our M15 chart. And then where our trend line go, these are our horizontal support areas. So we are waiting for a place where market will have aggressive sell and aggressive buy. So 1, 2, and we have 3. So we're waiting for the market to either retreat back to this zone, but the market did not retreat. Can you see? When the market got to this zone, the market could not touch the box. So we are not going to enter any trade here. We won't enter any trade here, guys. We won't enter any trade. Let me change the color, okay? So that it will be different from what we have already done. We won't enter any trade here because the market did not touch. So here, no trade. So we have to wait again for the market to touch again. But the market did not touch anything until it came back and touched here. So this is where the market touched. So we enter our buy signal here. Straightforward. We enter our buy here. We put our stop loss behind the structure, a little something reasonable, and we take our profit 1:2. That's all. Always take 1:2. So we enter here. We enter here, we take our profit to 1:2, and then our stop loss goes 1. Okay, so if you're risking $100, you take what? $12. If you're risking $500, you take $1,000. Always make sure you take twice of your risk. Okay, twice of your risk. So that's it. 1:2, and then you're out of the market. Simple, guys. When you take it, you're out of the market because support and resistance zone must be tested once. Sometimes it can be tested twice or 3 times, but I'm not sure. I'm not fan of it testing several times. So you wait for the market to test. You wait for 1, 2, 3, and then the 4th time the market touches the same zone, you enter your buy signal. Here it did not touch, so we can't buy here. But here it came back to the upside. It touched the upside, so we were able to enter our trade here, and then we take the market down. Guys, don't say, look at the market has sold. Why didn't we take 1:6, 1:7, 1:15, 1:10? Why didn't he do that? Guys, you cannot tell. The market has already played, so you cannot tell. So when you enter the market, take your 1:2 and you're out of the market. Whatever is going to happen to the market, you don't care. Okay, whatever happens in the market, you do not care. Just take 1:2 and you're out of the market. Simple, guys. So now back to the H1 of the same analysis candle. So we are going back to the H1. So H1, and we are still on the H1 candle, right? This is the trade we just took right now. So after we take our support and resistance zone, now we're out of the market. That's all. We should go out of the market. We set for different setup or different market. Simple. Though the market come back and can still retrace, but we don't care. Okay. If you are a day trader, you must not be greedy. Don't be greedy. Okay. Just take your entry and you're out of the market. So 1, 2, 3. We take our entry here. We sell. We look for another pattern again. 3 zones. Yes, 3 zones. Who can show me 3 zones? 3 zones. Let me clean this one. 3 zones. Yes, 3 equal zones. So here we had 1 zone, 2nd zone, but the 3rd one did not touch wall. Let me see. The 3rd one did not touch wall. So let's add this one, and it's 2 stretched. Okay, let's consider it as a zone. So we have 1, 2, and we have our 3rd zone. So when the market retreats back to any of these 3rd zones, we are going to have our entry, right? Guys, are you watching? So we have first one. We have our 2nd touch, and 3rd touch confirms our setup. Now we are waiting for the market to retreat back to any of these lines. So either retreat back to the upside or retreat back to the downside. And here the market touches the downside. But we are not going to buy here on the H1. We go to the M15 to look for entries. Okay. So back to M15. And then where is it? Where is it, guys? Yeah, it's here. So the market touches and we look for our entries on the 2nd touch. Let me zoom it out. Good. So this is our entry. So 1st touch, 2nd touch, and then we had our 3rd touch. So you enter your trade here. When you're trading support and resistance zones, you don't have to wait for confirmation, okay? Because sometimes the market can be very aggressive. That's why it's called demand and supply zone. So you can't wait for confirmation zone. Sometimes the confirmation zone will show, but most of the time it won't show. So the moment the market touches, When your setup is ready, 1, 2, 3, if it's ready, your market touches, you just enter your trade and then you ride the trend up. Okay, fast, take a profit. So you enter your trade here. So you enter your trade here. Anywhere you can put buy limit order here, anywhere, and then your stop loss will be below the structure, and you take profit 1:2. Okay, if you are risking $100, you take $200. If you are risking $400, take say $800. Okay, 1:2. After that, whatever the market will do, you don't care. So you just enter the market here. Somebody is still being greedy, right? They say, oh guy, oh Seth, why isn't that we are still not taking all the way up to here? Guys, we don't care whatever happens. So the market would have locked us out here. That's all. We are out. We've taken 1:2, we are out. We are not greedy. Guys, are you listening to me? Don't be greedy, because it's not every day the market will just go up. Assuming you did not take your profit here and the market was trying to come down. Will you have the patience to wait for the market to retrace back again? You'll be fearful, right? You'll be fearful, and you might even close a trade here. So instead of getting 1:2, now you end up getting 1:1, and which will not make it profitable. Okay, so you take 1:2 and you're out of the market. That's all. 1:2 and you're out of the market. $100 to make $200, $300 to make $600, $500 to make $1,000, and you're out of the market. Simple. So always you have to open your chart every morning. You open your chart every morning, and then you look for these setups. Okay, look for your currency strength meter. You check your currency strength meter to see which currency is strong and which currency is weak. You merge the strongest with the weakest if you are trading the trend, if you are riding the trend. But if you want to trade supply and demand zone, you merge the 2 strongest currencies and you merge 2 weakest currencies before you can trade supply and demand zone. Let's look for another example on the chart, and let's see if you can find another example on the chart. So another example on the H1, as you can see, we have one support area here, second support area here. So it satisfies one of our criteria. Second criteria, we want something like a V shape, right? 1, 2, 3. So we have first area, second area, third area. So you're waiting for the market to retrace back to any of these zones. Okay, trace back to any of these zones, and they're going to enter our sell or buy limit. We are going to put our sell or buy order here. So we extend our lines to this side, and when market come back to that zone, we enter our buy or sell signal there, and then we ride the market down. But at this particular zone, you see the market will not retrace up back to this zone, but the market will trace back to this particular zone. So as you can see, the market came to touch. So on the H1, after we find the lines, we go back to the M15 to see if the market will come and touch. When the market come and touch on the M15, that's when we look for our entries. So M15, let me zoom it in. So the market came to touch here. As you can see, the market came to touch, and then we just buy immediately the market touch. So we take our profit 1:2 and you're out of the market. Profit 1:2 and out of the market. So you put your profit target here, and then you take 1:2 and your stop loss somewhere below the structure, somewhere here. So your stop loss somewhere here, okay, somewhere here. Don't be greedy. Take 1:2 and be out of the market. So your stop loss here, and then your profit target here. So if you're risking $100, you're making $200. If you're risking $500, you're making $1,000. Okay. So don't be greedy, and always look for these setups every day. So every day when you wake up in the morning, go to your charts, okay, find your currency trend meter, merge the strongest with the strongest and the weakest with the weakest, so that you can find ranging markets. Okay, don't merge the strongest with the weakest. If you merge the strongest with the weakest, then you are finding trending markets. If you are merging the weakest with the weakest, the market is going to range. So that's what you want to trade: support and resistance, or demand and supply zone. If you merge the strongest with the strongest, that's when you're going to find ranging markets. Okay, so if you want to find ranging market, you merge what? The strongest with the strongest, or the weakest with the weakest, and both of them will be turning upside down, upside down, upside down. The moment the market, one of them becomes stronger, then the market will begin to trend down. Okay, the moment one of them becomes stronger, the market begins to trend down. So if you want to trade supply and demand zone, always find market which is what? Stronger, 2 stronger markets, and then you trade them. Guys, very simple, right? Very simple analogy. So that will be all for this video. Don't forget to like, share, and subscribe to the channel, and see you next time. Bye.